This is a 100 peso note. Eva Perón's face, that familiar blue and purple ink, the promise of value that Argentines stopped believing decades ago. Last year, this bought approximately 11 cents worth of goods. This morning, it buys 3 cents. By next week, it might buy nothing at all. Argentina is experiencing its 9th sovereign default in 200 years. But this default is different. This time, President Javier Milei isn't fighting the collapse. He's accelerating it, deliberately, as strategy. 3 days ago, Argentina stopped paying interest on $147 billion in foreign-denominated debt. No announcement, no negotiation, no IMF consultation, just silence. Wire transfers that didn't arrive, coupon payments that didn't clear. A nation of 46 million people slipping into financial void without a single official statement. The silence is the strategy. Milei isn't defaulting because Argentina can't pay. Argentina can't pay, but that's not why he's defaulting. He's defaulting because default is the fastest path to his actual goal, the complete destruction of the peso and its replacement with the US dollar. The plan requires chaos. The chaos is arriving. And when Argentina's $500 billion economy collapses into dollarization, the shockwave will detonate across every emerging market in Latin America. Here's what they're not telling you. Milei campaigned on dollarization, replacing the peso with the US dollar as Argentina's official currency. The promise was popular. Argentines have watched their currency lose 99.8% of its value over 40 years. They've lived through hyperinflation, currency controls, bank freezes, and forced conversions. The peso represents not money, but theft, government stealing purchasing power through inflation. Dollarization promises escape. No more peso means no more inflation. No more central bank means no more money printing. No more devaluation means savings that actually save. The promise has problems. Dollarization requires dollars, actual physical and electronic dollars, to replace pesos in circulation. Argentina's monetary base is approximately 25 trillion pesos. At current exchange rates, approximately 33,000 pesos per dollar, that's roughly $750 million needed to replace circulating currency. But the broader money supply, M2, including bank deposits, totals approximately 85 trillion pesos. Full dollarization requires $2.6 billion just to back existing deposits. Argentina's foreign reserves, $21 billion, mostly borrowed, mostly committed to existing debt service. The reserves are insufficient by an order of magnitude. Milei's solution? Make the peso worthless enough that replacement becomes cheap. At 8 a.m. Buenos Aires time, on January 22nd, I obtained internal government communications through a source in Argentina's economy ministry. The communications reveal a deliberate strategy that no official has publicly acknowledged. The strategy has 4 phases. Phase 1, silent default. Stop debt payments without announcement. Let creditors discover the default through missed wires rather than press conferences. The silence creates uncertainty that accelerates peso collapse faster than announced default would. Phase 2, accelerated peso destruction. Remove remaining currency controls while the central bank stops intervention. Let the peso find its true level, which internal projections estimate at 150,000 to 200,000 pesos per dollar. Phase 3, conversion at destroyed value. Once the peso reaches target destruction, convert all peso-denominated assets to dollars at the collapsed rate. The 85 trillion peso money supply, at 200,000 pesos per dollar, requires only $425 million to fully dollarize. Phase 4, rebuild on dollar foundation. With dollarization complete, negotiate new debt terms with creditors who have no choice but to accept restructuring. The default clears old obligations. The dollarization prevents future inflation. Argentina restarts from zero. The strategy is economically coherent. It's also deliberately devastating to anyone holding peso-denominated assets, which is every Argentine who hasn't already converted to dollars. At 11:30 a.m. Eastern, on January 22nd, the first signs of the silent default emerged. J.P. Morgan's emerging markets desk flagged a missed interest payment on Argentina's 2030 bonds. The payment, $340 million, was due January 20th. Grace period, 30 days. But the non-arrival triggered automated alerts across the financial system. By noon, Bloomberg terminals showed Argentina credit default swaps widening from 2,800 basis points to 4,100 basis points. By 2 p.m., they reached 6,500 basis points, pricing in near certain default. At 3 p.m. Buenos Aires time, Argentina's economy ministry issued a one-sentence statement. The ministry is reviewing all external payment schedules. The statement confirmed nothing and everything. Review means delay. Delay on sovereign debt means default. The peso's response was immediate. The official exchange rate, still maintained through limited central bank intervention, held at 33,000 per dollar. The parallel blue dollar rate, the actual market rate, crashed from 41,000 to 67,000 within hours. By January 23rd morning, the blue dollar rate reached 89,000. By evening, 112,000. The pace of collapse exceeded even the 1989 hyperinflation that peaked at 5,000% annually. This is where the lie becomes unsustainable. Milei sold dollarization as salvation. What he's delivering is expropriation. The peso destruction required for cheap dollarization destroys the savings of every Argentine who couldn't convert to dollars in advance. The working class, paid in pesos, saving in pesos, holding pesos because they lack access to dollar accounts, absorbs the loss. The wealthy converted years ago. Argentine elites hold estimated $400 billion in offshore dollar accounts, more than Argentina's entire GDP. They watch peso destruction from the safety of Miami condominiums and Swiss banks. The middle class is being crushed between elites who already escaped and poor who never had anything to lose. A teacher's pension worth $500 monthly at January 1st exchange rates is worth $150 at current rates. A factory worker's savings, accumulated over decades, evaporates in weeks. Milei's base includes these victims. They voted for dollarization believing it would protect them. They're discovering that dollarization requires their impoverishment as precondition. At 4 p.m. Buenos Aires time on January 23rd, protests erupted in Plaza de Mayo, the traditional site of Argentine political demonstrations. Initial crowds estimated at 30,000. By evening, over 100,000. The protests are not organized by opposition parties. They're spontaneous. People discovering simultaneously that their money is worthless, their savings are gone, their futures have been sacrificed for a monetary experiment they don't understand. The police response has been restrained. Milei's government understands that violent suppression would accelerate the very instability the dollarization strategy requires. Better to let protests burn themselves out while the peso burns down. Less than 30 days separate today from complete monetary system failure. The timeline is driven by several converging factors. Inflation acceleration. Prices are adjusting to the peso collapse in real time. Supermarkets are repricing daily, sometimes twice daily. Annual inflation rate, calculated from current monthly trajectory, approximately 18,000%. Bank-run dynamics. Argentines are withdrawing peso deposits and attempting dollar conversion at any rate available. Bank peso deposits have fallen 40% in 72 hours. The withdrawals accelerate peso velocity, which accelerates inflation, which accelerates withdrawals. Import collapse. Argentina imports fuel, machinery, electronics, and pharmaceuticals. Importers require dollars. Dollars are unavailable at any reasonable rate. Import orders are being canceled. Shortages are emerging in categories from medicine to motor oil. Wage price spiral. Workers demand wage increases to match inflation. Businesses that grant increases raise prices to cover costs. The spiral accelerates until the currency becomes unusable for commerce. The Argentine central bank could intervene, selling dollar reserves to support the peso. They're not intervening. The silence extends to monetary policy as well as debt payments. The central bank is letting the peso die. When Argentina defaults, Latin American markets convulse. The contagion mechanism is already visible. Brazilian real fell 8% against the dollar on January 23rd, the largest single-day move since the 2015 recession. Brazilian fundamentals haven't changed, but investor risk reassessment is contagious. Mexican peso fell 5% despite Mexico's strong external position. The correlation is psychological. Latin America becomes a risk category regardless of individual country fundamentals. Chilean peso fell 6%. Chilean copper exports and fiscal discipline should insulate the currency. Contagion overrides fundamentals. Colombian peso fell 7%. Peruvian sol fell 5%. The entire region is repricing simultaneously. At 6 p.m. Eastern on January 23rd, I spoke with an emerging markets portfolio manager at a major asset management firm. She oversees $14 billion in Latin American exposure. We're liquidating everything. Not because Brazil or Mexico have problems, they don't fundamentally, but our investors don't distinguish. They see Latin America and they see Argentina. The redemption requests started this morning. By next week, will have sold $2 billion in regional positions, regardless of our views on individual credits. I asked about the forced selling's impact. Forced selling creates forced selling. We sell, prices drop, other funds face margin calls or redemptions. They sell, prices drop further. The cycle feeds itself until either prices reach levels where buyers emerge or the selling exhausts itself. For Argentina-adjacent assets, I don't know where the bottom is. I asked about recovery timeline. Argentina took 3 years to recover from the 2001 default. This default is more severe. The government is deliberately accelerating collapse rather than trying to prevent it. Recovery timeline is unknowable. For the region, we're looking at 12 to 18 months of elevated volatility minimum. The IMF dimension adds institutional complexity. Argentina owes the IMF $44 billion, the largest program in IMF history. The debt resulted from a 2018 bailout that failed to prevent the crisis the bailout was supposed to prevent. IMF debt is special. Unlike private creditors, the IMF has preferred creditor status. They get paid first, always, regardless of other defaults. Countries that default on the IMF lose access to the global financial system entirely. At 9 a.m. Washington time on January 23rd, IMF Managing Director Georgieva issued a statement expressing deep concern about Argentina's payment delays and requesting immediate consultation with Argentine authorities. The consultation request is the first step toward IMF program suspension. Suspension means Argentina loses access to remaining disbursements, approximately $6 billion that was scheduled for 2026. More critically, suspension signals to all other creditors that Argentina is truly in default, not merely delayed. Milei hasn't responded to the IMF request. The silence toward the IMF, the one creditor Argentina cannot afford to ignore, suggests he's willing to accept complete financial system exclusion as the price of his dollarization strategy. The exclusion might be temporary. Previous Argentine defaults ended with restructuring deals that restored market access. But previous defaults weren't deliberately engineered as currency destruction strategies. Creditors might be less forgiving when they understand the default was planned, not forced. What the informed understand is that Milei's strategy gambles everything on dollarization's success. If dollarization works, if Argentina achieves monetary stability after the chaos, the pain becomes the price of reform. Milei becomes the leader who finally fixed Argentina. If dollarization fails, if the chaos doesn't resolve into stability, if the destruction doesn't enable rebuilding, Milei becomes the leader who destroyed Argentina for an ideology that didn't work. The gamble's stakes extend beyond Argentina. Dollarization has been proposed for other Latin American countries. Ecuador adopted it in 2000, El Salvador in 2001. If Argentina's chaotic path to dollarization succeeds, other countries might follow. If it fails catastrophically, dollarization becomes discredited across the region. At 11 p.m. Buenos Aires time on January 23rd, President Milei addressed the nation in a televised speech that confirmed the strategy without quite stating it directly. The peso is an instrument of theft. For 70 years, governments have stolen from Argentines through inflation. That theft ends now. The transition will be difficult. Prices will rise. Savings will adjust. But the adjustment is the cure, not the disease. When it ends, and it will end, Argentina will have money that cannot be stolen. Dollars, sound money, freedom. The speech offered no timeline, no specific policies, no acknowledgement of the default. The vagueness is deliberate. Specificity would invite resistance. Better to let events unfold than to announce plans that can be opposed. The 100 peso note weighs about 1 gram. The paper it's printed on cost more than the note is worth at current exchange rates. People are using pesos as kindling because the notes burn longer than their purchasing power lasts. The image is familiar from other hyperinflations: Weimar Germany, Zimbabwe, Venezuela. Currency becoming worthless faster than it can be spent. The velocity of money approaching infinity as people try to convert to anything real before value evaporates. Argentina's hyperinflation isn't accidental, it's engineered. A president deliberately destroying his nation's currency because destruction serves his policy goals. The destruction falls on those least able to escape it. The wealthy have dollars. The connected have access. The ordinary Argentine, the teacher, the factory worker, the shopkeeper, watches savings evaporate and wonders why salvation feels like annihilation. $147 billion in defaulted debt, 46 million people in economic freefall, 18,000% annualized inflation, 30 days until complete monetary system failure. The numbers describe catastrophe. The catastrophe is deliberate. The deliberation serves a goal that most Argentines don't understand and didn't consent to. Milei was elected on promises of dollarization and economic reform. He wasn't elected to engineer hyperinflation as transition strategy. The strategy emerged from ideology, not mandate. The silent default continues. The peso collapse accelerates. The protests grow. The contagion spreads. Latin American markets that have nothing to do with Argentine policy, that built fiscal discipline and monetary credibility over decades, suffer anyway. The correlation of panic doesn't respect fundamental analysis. The 100 peso note is worth 3 cents this morning. By the time Milei's plan completes, if it completes, the note will be worth nothing. The nothing is the point. Only when pesos are worthless can dollars replace them cheaply. The cost of cheaply is measured in life savings destroyed, retirements canceled, futures foreclosed. That cost is being paid now, by people who voted for something else and received this instead. Argentina's 9th default. But the first one that was the goal rather than the failure. The peso burns, the dollar waits, and 46 million Argentines discover what it means when ideology meets reality, and ideology refuses to blink. The note weighs 1 gram. The weight of consequences is being measured in different units entirely.